any chart you have looked at since? Is there any chart you have been looking at, or you're confused about anything? Is there any chart you have been looking at? Because we have been talking about, okay, let's just go have a little review of what we have been saying since. We said technical analysis is what using your applying your physical market on charts, on chart representations. That's what we are seeing here now. Applying it there and analyzing your charts. That's what we call technical analysis. I'm moving all these things now. Okay. That's what we call technical analysis. Analyzing your charts, making decisions based on the information you find on the charts. That's what technical analysis entails. And we talked about when somebody that makes use of those things, those informations, is known as a technical analyst. Anybody that makes use of this technical analysis to determine, take entries and takes his trade is known as a technical analyst. And these things, there are different terms and different things that are very, very vital in making trades, especially when you are taking trades now. We know about valid tops and valid bottoms. I told you people that when you are finding valid tops and valid bottom, even if you don't get everything I'm saying, you must not get everything from my teaching, but you can still take those keywords and read about them on your own. There's no way you can, as you're learning, you learn everything at once. Pick it, write it down, and go and study again. It's going to help you. Valid tops and valid bottoms, most of the time they are made up of 3 or 2 LD candles forming. Usually, look at what happens here. Look at what happens here now. Look at what happens here. You see, this 1, 2, 3 candles that moved here. These 3 candles like this. You can call this it formed a valid bottom because it's 3 healthy candles. From here now, you can begin to expect a bottom once you have gotten 3 major dumps like this. You can begin to expect a bottom. That's why I'll call it a valid bottom.
So sorry, I'm not seeing your pointer. Okay.
I hope you can see it. You can see what I'm using.
Yes, when you circle there, I can see.
Okay. These 3, this thing here. You can see this one here. Another healthy candles that formed here, including this first one. Begin to form a bottom, then went up again, continued. These are valid bottoms. All these ones here, you can see these ones here, you can call them invalid top. I don't even have time to go through, teach you guys how to trade all these invalid setups here. But if you can know about the valid ones, the invalid ones, gradually you still understand. The main idea is having a good distance. A valid top and a valid bottom must not be 3 candles. It can be up to 4 candles, can be up to 5 candles, but the main idea is having a good distance like this. So that's one of the major things. I gave you guys a book. Some people asked me some questions about the book, the candlestick. Very good. I like what happened there, but lately I'm noticing the coldness. A lot of people are not really really catching up with this last part. And that's what I want us to look at gradually. I wanted us to bring out examples, so that from the examples, we can begin to pick out some points. But noticing no one is coming up with their trade setup, I said, download Tab Trader. Tab Trader is not looking at your location this time. Anybody that has Android phone can download it and use it to do everything I'm doing. The tools are there. The same with what I have is what you have. If you're taking this thing seriously, it's going to help you. It's a lifetime training that can help you to be financially independent all your life. If you want to play with it, and maybe tomorrow you go and enroll for another professional, whatever course, at the end of the day, I pray that it's going to put money in your pocket. Well, if this has been helping me, it's going to help you also. So the long and short, the summary of all these things is, number one, know how to find your trends. Trend is like everything. According to the popular saying, it says the trend is your friend. It's like everything in technical analysis. Trend, support and resistance, supply zone, demand zone. These things are like saying the same thing. Supply zone is where sellers go and sell. Resistance. Demand zone is where buyers buy. Support. It's simple. Look at, like what we have here. This is a 4 hours chart. This is a 4 hours chart. You can see this trade started picking up from this point here. This point. I hope you guys can see what I did, what I'm doing here. Some people were asking me, how do we know resistance? How do we know resistance? Resistance is not one single point. Resistance, look at here now. Resistance is a zone, not a single point. Some people can decide to begin to buy earlier. Some can buy at the lower resistance. Some can buy at the top parts, the ones that are more aggressive. Everybody, it depends on what your risk tolerance. You can decide to jump in earlier. Some people can decide to say, let's wait. Sellers start selling. Let's wait until they sell lower, we'll buy. And when the trade is going up too, some people can decide to wait. Let's wait. It's like we still have some buyers. They are still going to push the market up. And they are waiting for the resistance maybe at this point now. Meanwhile, the buyers get weak and they begin to dump it from here. You see, it happens. So some people are more aggressive. They want to sell on time and they sell quickly, and they just sell fast and they will start making gain. The strategy that I employ is, as I'm buying, from the very first resistance I see, I start taking out profits gradually. I start taking out profit gradually. Until everything, until maybe after taking out profits to the point that maybe the thing wants to reverse, and now see a confirmed reversal candle, or we see those, according to the question someone asked me today, you see those anchor candles that will just dump fast. You run away. But once you are in a trade, make sure you are going out, you are scaling it gradually, you're scaling out gradually. That's how it's done if you want to preserve your profit. So that is how, that's what we explained here. And thirdly, we said for you to take a trade, I'm giving you a summary of what I've been saying since. For you to take a trade, just 3 steps, 3 key things that must form part of your key points in trading, that must form part of your trading plan. Number 1, what is the trend? Look at your time frame, different time frame. Am I going to be able to be patient to be trading for using the daily time frame to trade? If it's that one you have time for, then look at it very well. If your trend, you follow the same pattern, if you can analyze your chart very well based on daily time frame, you're good. Daily time frame will give you peace of mind, or you can take your trades there, observing same principle. If you do it on 1 hour chart, you still have to observe same principle. Number 1, determine your trends. Which trend is happening now? Which one should I follow? Hello?
Yeah.
Please mute your mic, everybody. I've said this over and over again. First thing, you determine your trend. You determine your trend. Like, sometimes these trends, they want to, you want to look as if there is nothing there. You go to the bigger picture. Determine it, first of all, before you go into the trade. Determine your trend. Know where to, what the trend is. Okay, this thing is an uptrend, because these things will give you edge in the market. It's going to help you so that you don't go against the trend. If you are trading against the trend, you are going to be putting yourself at risk, because things can change rapidly and you have lower chances of making good trade. If you don't find good trade points, don't enter. Okay. Then we talked about, after knowing your trend, finding trade points, swing points, know where to enter. Swing points means after you've checked out for those, if it's uptrend said what? The thing is forming higher high and higher low. Like this, what we're seeing here now. This thing went from here. Number 1, don't trade based on candlestick alone. That's one thing a lot of people make mistake. They just look at candlestick and they say, oh, this candle, you got a reversal here, they want to enter. You could be lucky you make out money from it, but you might be unlucky and this thing will go up and continue going down, and then you lose money. It's not a good way of trading. Don't trade based on candlestick. You trade based on your trend. It goes up like this, you got a rejection, and then it goes up. You see a considerable amount. This is a valid top that came up here, 1, and went down, formed another valid top again, 2. You can see it's giving you higher low. But this time it broke it and went down again to say, no, let's start this trend again. It goes up, gives you a complete valid top, and then still continued and went up to this point and went down. This is your higher low 2, higher low 1, higher low 1, which is your first point. Higher high 1. Then, normal. Okay, so you can see this thing on the big time frame. We are not getting it. This thing is, we are doing it on a very big time frame. Let's go down to 15 minutes chart. Because right there, the trend has not formed. It did not form. But the idea is this, finding those swing points, finding those swing points. Let's say we start from this 32. 32 gives us this candle here. From here, we move up, got a top here, swing up, swing high, yeah. And then we went down. This place becomes your higher low one. Then this place is your higher high one. This is telling you how trends are formed. Higher high one. Then
Sorry.
after this point,
Can I ask a question?
Hold on, let me finish with this explanation.
Okay.
Then you can ask your question. So on this 15 minutes chart, where you use in entering trade, I've said this over and over, you can use 15 minutes chart to get into a trade. When you get a dump like this, and then you notice a reversal candle, and then you're seeing it's forming an uptrend. You allow the trend to form. An uptrend consists of what? Higher low one, higher high one, higher low two. Then when it forms then higher high two. You now look for your entry position. You have seen that once it has formed those two, this thing, higher low one, higher high one, higher low two, higher high two. That means you have noticed what? A trend has formed. A trend has formed. Then the next thing you are looking for now is what? A supporting bullish candle. Simple. Once you get that supporting bullish candle, it might be this one here. Maybe you notice it. You notice the bullish candle, and possibly is above your moving average or above your support. It must not be above your support and resistance, but you get that trend and you see a bullish candle, is enough for you to enter the trade. You have the odds on your side at that point. If it's above your support